What is up, TubeU? It is the Money Sausage here. Today we're going to be talking about investing. What investing should look like, how to get started, and what kind of basic principles you should apply to when you first are starting investing. Make sure you hit that subscribe button, and if you like this video, please leave a like. It helps me out a lot. And comment down below if there's anything you want to see in the future. Now, what is investing? Investing is the idea of taking your money and buying a part of a corporation that is traded publicly, which basically means that the company has a set amount of shares that is available to be purchased. So, for instance, I'm going to make up some fake numbers. Let's say you start a corporation and you hit $1 million in market cap. People may want you to go public so they can invest and grow with. You may be like, okay, so we want to make 1 million shares. Each share is going to be worth $1. Now, in order to hold a majority ownership of the company, you have to own 51% or more of your shares to maintain ownership. Now, that leads into a completely different story about how you can overtake a company with a lot of money and a lot of investment. But that's a different story for a different time. Now, your next question is going to be, okay, so you kind of understand what investing is. It's buying a part of a corporation and gaining, as they gain profits, the stock will go up, and if they start hitting losses or stuff is becoming more expensive, and they're just not capitalizing on the traction they already have, their stock will start falling. Best way to start investing is, first off, get an account. Now, this is what I recommend. It's public. There's a link down in the description to where if you use that link to sign up, you can get stock worth up to $1,000 by signing up with that link down below. Now, what's really cool about public is it allows you to buy fractional shares, which is really important to when you're first investing and you're just trying to learn the ropes. Now, what a fractional share is, imagine you're buying a stock. Google is a whole apple pie, and there's a whole bunch of it that's of value, but that stock for a single share is ridiculously expensive. It's upwards of $2,000. I don't know the exact price right now. When the video is published, it's going to be a different price. But we're just going to say, for the purpose of the video, it's $2,000. Now, when you're first investing, you want to learn the ropes by doing small investments, learning how to do short-term and track the stock market. There's going to be a story of how I failed later down the road on a later video. But you want to do small transactions and not put up all of your wealth into one asset that can just collapse. Because the one thing about investing is you need to be diversified. You need to be able to have many different assets, many different attributes. So if one sector takes a hit, so if you have oil and oil takes a hit, you also have technology, and technology will do really good when oil takes a hit. And kind of vice versa. But in order to start building that diversity without putting all of your money into a single asset, like buying Google Alphabet, you can do fractional shares. And that's taking the whole pie, but cutting off a tiny slice, and allows you to still buy the stock, but only at a fraction. Say you have $200 that you have set aside to invest. It will allow for you to be able to purchase that stock and diversify by buying, let's say you buy $20 of Google, you buy $20 of Tesla, $20 of Amazon, $20 of an oil company, $20 of a mutual fund, $50 of an index fund, just stuff like that. But allows you to buy fractional shares. So you're still in the game, but you're not fully in the game to where you're not fully responsible if it takes a massive hit and if you make a bad investment. So that's why it's really cool, and I really enjoy public for that fact, because public allows you to buy those fractional shares. So you can get into the game, you can start learning the ropes, but at the same time, you're not putting up all of your money at risk. Now, also what's really cool about public that I really enjoy is you're allowed, it's like a social media. It's Twitter for investing. You can follow your most favorite influencers or just people that share their portfolios. You can see what I'm investing in when you follow me, the Money Sausage, on public. You can see what my portfolio looks like. You can't see how many I have shared, but usually I'm going to sending out what I'm buying and why I'm buying it. So when I bought Carnival Cruise, I put out a public announcement saying, hey, I'm buying Carnival. Why? Because I think there's a very good potential for up. And that's really cool that you can follow your influencers and you can get going, but also be involved with the community so you can learn a lot more. Because being able to be involved in a community is huge with learning about investing. Now, this series is going to be focused on people in high school, college, or people that are just coming to money, or that don't have any money at all but would like to start saving up and investing and growing their wealth and their potential for wealth in the future. Is another long-term investment platform I use, which is Charles Schwab. I love it. It allows you to buy over-the-counter stocks. So over-the-counter can be penny stocks or at risk. That's how I got starting on my journey as with investments. It was buying penny stocks. I bought JCPenney and I just day traded it just to see what the trends were, how money, what their profit and loss were, how it would affect the stock. And that's how I kind of learned the ropes. Now, public doesn't allow over-the-counter. That's the one downside. But Charles Schwab does. But however, the good thing is that Charles Schwab and over-the-counter stocks are under $5 usually. And Schwab only allows you to buy whole shares of a stock. So that's why I like doing more expensive stocks on public that I may hold for a longer time, or just do for a very short time if I know that something's going to happen that's going to explode the stock price, just so I can get in and have that percentage increase of my portfolio. But with Charles Schwab, I'll buy more penny stocks, more over-the-counter stocks, but also Schwab has some amazing ETFs and index funds, which is a great way to diversify. As I said, we'll talk about that in a later video, but just to give you a basic rundown, index funds and mutual funds and ETFs, there's different sectors and there's different terminologies. That's why there's different terms. But it's the best way to diversify with buying one stock. There's a index fund that I buy through Schwab. I think it's SCHB. It's a great mutual fund because it allows for you to be diversified. It's a S&P 500 mirror stock. So everything the S&P 500 has, it's invested in as well, but at smaller quantities. So although the S&P 500 is really expensive to buy one share of, this SCHB, it allows for you to mirror the stock without having to buy, without having to put up as much in. Great way to diversify, great way to buy whole stocks. So Schwab is great for long term if you know you're going to buy a stock and hold on to it. There's not much in the ways of 401ks, Roth IRAs, but they do have amazing index funds available on the Schwab, which I should have a link down below for you as well. Roth IRAs, 401ks, retirement funds. The two that I really recommend to get yourself in the door with is Fidelity and Vanguard. Vanguard and Fidelity are renowned for their retirement funds. Vanguard has a very easy to set up Roth IRA, and they have amazing support system for those retirement plans. Now that's kind of the purpose of investing, is not just to get your money in the market and just to make percentage-wise. Investing is a great way to hedge against inflation. So if you buy into the S&P 500 and inflation is going through the roof, you're also going to see the prices kind of resemble however much inflation is, plus some extra percentage, so you're still making money. The S&P 500, NASDAQ, whatever, they'll usually have about 7% growth on top of whatever inflation is that year, which is amazing. So the basic principle to aim yourself to retirement is however much you can live off of just 7% return. And that is what you need to be in your portfolio invested in the mass. So those are some great ways to start investing. How to get an account set up, where to get an account set up to where you can start executing and buying stuff. Now, things you should invest in are things you know, things you understand, things you believe in, things that you truly understand the ins and out of. That was my biggest mistake when it came to investing. I bought JCPenney because it was a penny stock, and I thought, oh my goodness, this is so cool. I can buy something so cheap. And yet it was a major downfall on my part because I didn't understand the business setup. I didn't understand what I was buying into. All I thought was I can buy a bunch, get a bunch of shares, and any movement in the positive direction will be massive amounts of money in my pocket. My big mistake was it's also the opposite. any negative direction it moves is a massive amount of money lost from my pocket. And that's where I really struggled with. It was the fact that I didn't know the ins and outs, so I didn't know how things would affect the business and the industry. Now, let's say you work in a fast food restaurant and you understand the service industry, you understand what it takes to be a good service member and to produce stuff for your customers. Then you can go into invest in Dairy Queen, Coca-Cola, stuff like that, to where it's a service-based industry, to where their money is made off of the service members. And you can go ahead and see how they're treating their customers. You can kind of tell where the stock is going. If things are looking up and there's some really promising things coming from that corporation, then invest in it. And you can see kind of how it's going to be resembled. And you understand what's going on and what will cause it to take a downturn and start losing money. That way you know when to sell. So if you're really into technology and you know there's going to be a huge release from a company, invest in it, because you'll know that stock is going to explode. But also if you know that there's some uproar in the technology community because a microchip or a processor or something is failing customers and they're not having the expected results, sell it. That way you can understand the ins and outs and you understand where everyone's perspective is. Because that's the thing about investing. The public persona of a certain corporation is going to determine the stock. If the corporation is looking very promising, there's going to be a lot of outlook and a lot of promise in regards to how the corporation is being run, you're going to see a massive explosion of the stock increasing. But if public faith fails and people are starting to not rely on the stock and really don't like it as a stock, you're going to see the price fall. It's not going to fall, it's going to plummet. And that's where you need to understand what's going on. Now, there's an easy way to do that, and that is called reading the white paper, the yellow paper, profit and loss statements that are produced at each quarter. And that's where you'll see some really big swings quarterly for a stock. Let's say you're investing in Amazon and they had a terrible quarter to where they're losing a ton of money, you're going to see the stock plummet. But if they also, on the other hand, made a bunch of money, you're going to see the stock soar. And that's where you want to execute. And if you use a product, invest in it. I mentioned Coca-Cola earlier just because it's a very wide-known brand. It's a very good investment. But if you use the product and you understand what's going on around the product, then that would be a great time to invest. If you believe in it, invest in it. So if you believe in Coke and you think that this is the good all be all, invest in Coke. Okay? But at the same time, if you know that Coke is falling short on something, we're just using Coke as an example. We're not saying that they actually did this. But if Coke is doing something that is making it not appeal to the customers anymore, then you know that something's going to happen that's going to affect the cost of the stock negatively. So basically the importance that I'm trying to stress here is follow what you invest in. You can invest in whatever you want, but at the same time, follow and be thorough with your investments. Because investing is a risk. There is a great potential for great growth, but at the same time, there's great potential for massive losses. And that's what's really cool about the public is they have you choose what your interests are when you're signing up using that link down below in the description. And they'll give you kind of a basis. Like I said, I'm really interested in Amazon stock, and I got Amazon stock, which was really cool. Also really important, and the final thing I want to talk about, and which I have mentioned throughout the video, is diversification. Make sure you buy into different industries. So if you really enjoy tech, then invest in tech. But if you also really understand what's going on with solar panels, invest in a solar panel business. But then at the same time, those are both somewhat technology. So go into a commodity of some sort. Go into water processing or something. Something that's not technology. And that way you can have some diversification. So if technology takes a hit, if there's a microchip shortage like we're seeing now, you can have a way to recover. Because handmade products now are going through the roof in popularity because they're not reliant on microchips and robots. So, with that being said, if you enjoyed today's video, please leave a like, hit that subscribe button so you can stay along and follow the journey. This is going to be in a playlist. It's going to be called A College Guide to Finance. So, if you do want to follow each of the videos in this series, go ahead and check out the channel and check out that playlist that's going to be made. And make sure that you leave a comment down below for anything that you want to see in the future and get my thought. Thank you so much and have a lovely day. Money Sausage out.